Hello everyone and welcome back to Investor Days. We're happy to have Stendörren with us today. My name is Marcus Henriksson. I'm an equity analyst at ABG Sundal Collier. So as I mentioned, Stendörren is next up, property company with focus on the Stockholm and Mälardalen region, also expanding into Norway and Denmark in recent years. With me I have the CEO Erik Ranje and the CFO Henrik next up, you guys.
Thank you very much, and perhaps we should close the door because there's a bit of a noise. But thank you very much for the introduction. Let's present then Stendörren. Stendörren is a listed real estate growth company listed on the Stockholm mid-cap list. We are active within the asset class logistics, light industrial and warehouse, primarily in the Mälardalen region, as you said. We also have an operation within residential, which may be perceived as odd, being on the sort of industrial side on one hand and residential on the other side. But the industrial logic behind that is location. Many of our properties are in, as you said, Mälardalen and in very urban location, just as Hammarby Sjöstad once upon a time was a Lugnes industriområde. But I will get back to that slightly later. I mentioned that we are a growth company, and that relates very much. I perceive ourselves as a derivative, you could say, on a number of macro trends. One trend is urbanization. We are located in a geography which is growing economically, but also population-wise. Another macro trend is e-commerce. We do logistics in very urban or locations close to Mälardalen cities. So we have a few growth drivers in the company which fuels the company. Before we go into detail about what we do in the business model, I would like to present a few operational highlights. We released our Q4 report just a while ago, a couple of weeks ago. And if we summarize the year 2022, we have now 8 consecutive quarters with positive and strong net letting. But then I disregard a bankruptcy that happened 7 quarters ago. But I mean, the machinery, so to say, is working very well on the net letting side. And the effect of that is that we have decreased vacancy continuously over the last quarters and have a vacancy of 8% only. And on a forward-looking basis, considering contracted rents, tenants moving in, and also tenants that we know are moving forward-looking 12 months, we have a vacancy of 7%. So it's continuing to go down, so to say, the vacancy. During 2022, the renegotiation led to rent increases of 21% on the rent contracts that were renegotiated during the year. That is a long-term sustainable sort of growth potential in the company, and the reason for that I will get back to. I think one topic that was on everybody's mind just a couple of months ago was to what extent the CPI we would be able to increase make the contractual adjustments on rents related to CPI, and I think a question mark in the market was whether the tenant would actually accept or try to renegotiate the rent contracts. But the outcome is good from our perspective, in the sense that the CPI adjustments were sort of absorbed and accepted by the tenants. We have a strong development when it comes to surplus ratio. Obviously, the surplus ratio improves as the top line increases, but also we have worked on the cost side very efficiently. Utilities costs and unit consumption has decreased, which means that we have actually the surplus ratio is an effect of good top line development, but also cost efficiency. We have had strong traction within project development. We have it says 25,000 square meters to be completed. I think 20,000 of those are now completed and to some extent let already. And we have received a number of very attractive building permits in light industry, logistics, warehouse, but also residential. I mentioned that we are very much Mälardalen focused, but we have over the last, let's say, 18 months also made acquisitions in other Nordic regions, i.e. Oslo, Copenhagen and Helsinki, with the same characteristics, i.e. light industrial assets in city or urban locations, because that's sort of how we think about it, and that's where we see the growth potential. We established a new sustainability strategy 2022. The existing or the previous sustainability strategy covered the period from 2017 to 2020. But we now establish a new sustainability strategy, and I will comment upon that slightly later. Pelle, would you want to go through some financial highlights?
Yes. Our financial key figures, return on equity and NAV growth, has been negatively affected by revaluation of investment properties, minus 143 million for the full year and minus 354 million during Q4. We did some refinancings of secured bank debt before summer 2022, which substantially strengthened our liquidity and also substantially extended average time to maturity on interest-bearing debt. We had 2.9 years as of Q4. We also increased our interest rate hedging late 2021. So as of Q4, we have 80% of our interest-bearing debt hedged. We also increased our energy price hedging early 2022. We have about 80% of forecasted consumption for 22 to 23 and about 50% for 2024. Our loans, we have green and sustainability-linked loans. About 6% are green loans and 36% are sustainability-linked loans.
Yes, just some data points about Stendörren. We have assets for 12.4 billion SEK. Loan to value below 50%, that's 47%. So a fairly conservative balance sheet in that respect. We are in a high yielding asset class. Our initial yield on the property is at 5.5%. With a long lease duration, we tend to have long rent contracts. So the average remaining lease duration as of end of the year 2022 was 3.8 years, which adds stability to the cash flow. We have 800,000 square meters of lettable area today. We have building rights for 660,000 square meters. So we have a relatively large building rights portfolio, which is a key growth potential in the company. If we look back where we're coming from, Stendörren was established 2014. It was a property portfolio carved out from another property company, put under separate management and listed on First North. And since then, growth has been very much acquisition driven. And I started 3 years ago as CEO, and we have continued that growth journey by acquisitions, but we have also made acquisitions in new markets. But I think primarily we have added the development potential in the company. We rezoned an area from industrial use into actually retail use into residential use. Obtained building permit for 800 apartments in Botkyrka, and we have now a pipeline of ready to start light industrial logistics project portfolio. So the attractiveness from an investment perspective when it comes to Stendörren, we have a very stable sort of cash flow as the platform. We are in a high yielding segment. We have long rent contracts, which gives us stability and sort of disclosure into the future. But we also have a number of growth drivers. One is obviously what I said about location. We are in the Mälardalen region primarily, which is a growing region. We are in e-commerce. We are in logistics, which is an e-commerce derivative. We can also convert some of our properties into residential use, which creates value. We have a handful of such projects where we are now rezoning or trying to rezone. And I will show a picture on why that makes sense for us. But another aspect of the fact that there is such a conversion trend in urban location is the fact that obviously square meters in the light industrial segments are then disappearing upon conversion, whereas demand is still increasing. And if supply decrease and demand increase, obviously the price of the underlying item increases, which in this case is rent. And that is why we have a sustainable growth potential in the rents. So the 21% increase in rents upon renegotiation, that is sort of sustainable, has been like that for many years, and in expectation will continue. We have, I mentioned 800,000 square meters of standing assets, 660,000 square meters of building rights. So that is some 80% growth potential more that we can develop in good locations, fairly urban locations. If we dig into the property portfolio a little bit more, some 2/3 of the property portfolio is within light industrial logistics and warehouse. We have some retail space, we have some office space as well, but the office space in particular tend to be in industrial assets. So in a sense, it's not true office risk or potential, if you want. It's more related to the underlying logistics or light industrial operation in that particular asset. Very round numbers here, but 1/3 of the property portfolio is in the Stockholm municipality, 1/3 is in the greater Stockholm region, and 1/3 is in Mälardalen, the rest of Mälardalen region. And for those who do not know Mälardalen, it's all greater Stockholm region, if you want. And then we have bought a couple of properties in the other Nordic capitals, amounting to some 6% of our property portfolio. The source of the rents or the source of the cash flow is fairly diversified. We have a diversified tenant base. We have some municipalities, Stockholm Vatten, Nacka Vatten. We have Coop, which is daily goods, obviously. We have an international company, Unilever. We have Swedish engineering. We have a life science company. We have 800 tenants. It's very granulated. The remaining lease duration is 3.8 years, as I said, which is fairly sort of evenly distributed over time. So again, diversified, stable, long-term cash flow. But then we come to growth. I will not go into this in detail, but e-commerce is growing, even though it has been growing a little bit slower post the pandemic. Stockholm regional urbanization tend to be a long-term trend as well, without going into details. So I skip on go to the next slide. Going a little bit into the future here, what we intend to do is to continue to buy in the urban areas where we are, i.e. in the Stockholm region, buy properties. In particular, we want to build critical mass in our new markets, which is Helsinki, Copenhagen, and Oslo. We will continue to invest in our building rights portfolio. We will not buy building rights because we have enough of building rights, basically. So that is the route forward. And the last bullet, I don't know if you saw the press release that we sent yesterday, but we are going out to the market for the purpose of buying back some of our outstanding hybrid bonds, 300 out of 800 million, which is a way of considering the new situation on the financing market to de-risk a little bit and adjust to the higher cost of capital. This is an overview of our project portfolio. This is what we refer to as future projects. I won't go through these in detail, but again, it's 660,000 square meters. It's within logistics, light industrial projects. It's also residential, where we rezone before we can do anything. If you see the municipality, to the extent that you're familiar with the Swedish municipalities, it's in Mälardalen region, almost exclusively. So it's a very sort of attractive project pipeline. This is the ongoing project, and again, it's urban or Stockholm close projects, both within light industrial use but also logistics use. And the 4 at the top are basically completed, except for the one in Uppsala, Librobeck. And that amounts, I think, is 23,000 square meters. And then we have a number of building permits for several of the remaining ones, which means that we are marketing them, and upon signing a lease, we can start the project on a pre-let basis, which is important. That is, I think we have an estimated completion time here, but that is the earliest point of time where we can complete, basically, because we do the projects mostly on the pre-let basis, which means that we need to find a tenant first. I mentioned the residential potential that we have in some of our properties, and this is an illustration, basically, if you look at the residential units here. We bought this property 2016 as a cash flow yielding asset, and the property is this bluish building. The facade is bluish, and the roof is black, and the property goes basically around here. And that we bought that as it's located in Botkyrka. Obviously, you see this by the water, and this area where we see residential units is just empty land and a parking lot. And here we rezoned, and we have a now rezoning which has gained legal force, and we have also obtained building permit for 800 apartments. Sorry, 300 apartments, but the rezoning is for 800 apartments, but the building permit is for 300 as a first step. So this is just empty land right now, and obviously this is in Botkyrka. It's a Stockholm municipality, and a better use of land, obviously, than just being empty. So this is the kind of potential that we have here and there in the portfolio. We have another area where we have received what you call positivt planbesked from the Stockholm municipality on rezoning an area of 110,000 square meter close to Drevviken, an overview of Drevviken close to Tyresö. That's another example. Sustainability, we up until 2021, I think we have done a lot of good work on sustainability. We have reduced CO2 emission with some 40% over the last couple of years, and also increased energy efficiency with 17% and migrated over to more renewable energy sources. We presented a new sustainability strategy April last year. I would say it's more of the same, but with higher ambition. I think the residential arm of what we do is sort of also adding a little bit more of social responsibility. I think also the fact that we are now doing more projects puts more sort of pressure on us on the CO2 emission. Within reducing CO2 emission, obviously project development is actually quite sort of, it leaks a lot of CO2. So that is what we've added, basically, and generally higher ambition. Some financial data points.
Yes. Some highlights from our Q4 report. As I mentioned before, substantial refinancings and increased interest rate hedging gives us a strong financial resilience. And as of Q4, we had 315 million in cash and 560 million in unutilized and available credit facilities. We had during the year a net letting of 40 million, and new lease agreements with an annual rental value of 84 million were signed during the year. And our lease renegotiations led to an increase in rental values of 21%. And our financial targets, as you see, well above our targets the last 2 years. However, value changes in Q4 has negatively affected return on equity and NAV growth. But as you also see, our ICR and equity ratio are still well above target. And our debt funding, our total financing consists of about 70% of secured bank debt. We have limited capital market financing, and new bond is maturing until mid-2024. We have low maturity and interest fixing, and about 80% of our interest-bearing debt is hedged, mainly with interest caps. And our shareholders, our 3 largest shareholders, EQT, Altera, and Länsförsäkringar, they have together about 60% of the capital and 78% of the votes. And they have been long-term or main shareholders for a long time, and no material changes during the last 12 months, except Länsförsäkringar. They have decreased the share of capital from about 17% to about 10%. And our assessed earnings capacity as of 1st of January 2023 and the next 12 months gives us an NOI of 645 million.
Thank you.
Perfect. Thank you for that. I guess it's time for some questions. First off, you acquired, as you mentioned, some properties in Denmark and Finland and Norway. What would you say is the biggest differences in terms of transactions and also managing those properties versus Sweden?
Well, it's the same asset class in the same kind of location, and so it's not a big difference as such. But we did choose to buy fully let properties with long leases, where a lot of sort of the property responsibility, the asset management lies within the tenant. So they are, to that extent, asset management light. But that's obviously choice, because it's easier to make an entry into the market buying that kind of properties. It's first upon when you have reached a critical mass, whatever that is, 10 properties, 10 plus properties, where you can build your own organization. So for that particular reason, we did choose to buy asset management light properties with long leases. Tenant assumes a lot of responsibility, and fully let. Yeah.
And what would you say is the biggest why you have grown faster in Denmark versus Norway, for example?
It's I think coincidence, really. Sometimes some markets are more competitive, and they are slightly different. It's as anybody who have done business in Norway know that it's a little bit faster there. They're a little bit more trigger happy. So it's for that reason it's been a little bit more difficult to buy there. Finland is Euroland, so for that reason, I guess the competition may be slightly higher there in comparison to Denmark, even though obviously the currency is pegged. But anyhow, but I think it's more coincidence, really.
Mm-hmm. And then you've shown some slide where you have the tenant structure, and since the IPO we had Coop at the top at around 10% of rental income. When does that lease mature, and also what do you intend to do with that property? after they move out?
The lease matures end September 2024. I mean, that's next year, obviously. So, and what we intend to do, I have a slide on it because I thought you would ask. So it's for the audience then, it's our largest property. It's 140,000 square meters. So it's a huge property. And the rent is fairly low per square meters, but it represents 10% of our lease income, and it's almost well, it's not rectangular. It's like a square, I think you call it, with loading docks around basically. So it's fairly easy to divide into different units. And we are now since we just signed the new lease with Coop, let's say half a year ago, which also meant that we knew when we would it would come back to us and we would take it into our possession. We didn't want to market it before. We knew when we could actually take control of it. So we just started marketing this, and I think the appetite from tenants is better than I expected. It's quite good. And we are looking into how to divide it into different areas. I mean, in the perfect world, we would like to let it obviously to one tenant, but that we would find a tenant who needs 140,000 square meters end of next year. It's nothing you can bet on. So for the purpose of flexibility, we are looking into how we can divide it in different ways. I think obviously it's easier to let smaller units, but it's also cost driving to rebuild to multi-tenant and smaller units. The more we work on it, the difference per square meter, so to say, on how you divide it, reduces, which means it's not a big difference between those two alternatives. However, the rent is higher if we divide it up to, let's say, eight units. It's still fairly large units. We talk about 10,000 to 20,000 square meters on the alternative to the right. But we have sort of a strategy with it, how we're going to take it to the market, and we have also a flexible strategy in the sense that we can offer a lot of different alternatives to future tenants, as you see here.
Very interesting. Thank you for that. And I think we are running out of time. So Thank you, Eric and Per-Henrik, for the presentation.
Thank you very much.
Next up is Trianon.